Hello and welcome to this Asiamet Resources Management Update call. My name is Kevin and I'll be your coordinator for today's event. For the duration of the call, your lines will be on listen only. However, later in the call, you will have an opportunity to ask questions, and this is done by pressing star 1 on your telephone keypad to register your question. If you require assistance at any time, please press star 0 and you'll be connected to the operator. I would now like to hand over to Peter Bird to begin today's call. Thank you.
Thanks, Kevin, and good morning, everyone. Just a little bit of background on this call. I think as Asiamet moves from the phase of explorer to developer to operator, we felt that it's appropriate to take a more regular approach to keeping shareholders and interested parties informed. So the purpose of this call will be the first of what will become regular quarterly investor calls, just to keep everyone in the loop and updated. We'll run through, in a fairly short and punchy way, a series of topics, and then to the end open up for some questions. So the agenda for today is to touch upon a number of things. First of all, the macro environment for the commodity that we're most exposed to, which is copper. Talk a little bit about where we operate, which is Indonesia, and the themes there. Touch upon our portfolio that we hold in the business, some action items that will come out of that, and then we'll open up for some questions at the end. And obviously we'll attempt to deal with them in a timely fashion. Obviously, we can't go on all day, but as I said, this will be a regular quarterly forum. I'm joined by the CFO, James Dio, and we'll sort of alternate throughout the session in presenting. Much of which we're going to talk about today, all of which we're about to talk about today has been publicly disclosed, but it is worth reiterating the points. So let's turn first to the fundamentals, the macro environment, why copper, and many of these themes you would have heard before, but it's worth reiterating. It's the biggest of the base metal markets, about 22 million tonnes per annum consumption, which remains very much supply constrained. So there will be, as time goes forward, much further demand in what we call the green sectors, electric vehicles and renewable energy. But it's interesting to reflect that despite trade wars and things, the copper market is still growing at 1.6% per annum compound over the base of 21 to 22 million tonnes per annum. If you think about that, that's around 350 to 400,000 tonnes of new metal is required every year to satisfy that demand. So one of our projects, the BKM project, that's 16 BKM, so it's significant. If we talk about the funding for the sector, the requirement to satisfy that ever upward curve is something in the order of $188 billion in new capital. And currently there is only about $44 billion committed. So if you like, only 23% of funds is committed to satisfy the demand curve. So there is a real problem there, and the lack of investment in the sector has been going on for some time. If we just turn briefly to talk a little bit about a couple of the new clean energies, first of which is electric vehicles, which is just one example of what we call the green metal revolution for copper. In the next sort of 10 years, about 11% of new cars will be electric vehicles, and that's an additional 1.8 to 2 million tonnes of copper over and above the base level of demand. If we turn to electrical energy, as you're aware, governments around the world are transitioning to more renewable, more environmentally friendly sources of energy. Primarily, of which are wind and solar, with little bits of hydro. But if we just look at wind energy, in the next 10 years, there's a requirement for 780 gigawatts of new capacity required. And this equates to about another 5.5 million tonnes of copper metal required, which is, if you reflect on that, is about 25% of current annualised production. So just those two items alone, over and above base load and base growth of 1.6%, are very real demand drivers in the copper space. If we look at the supply side, the lead time to bring on a new copper project, in fact many mining projects around the world, from first drill hole to production averages somewhere between 10 to 15 years. In 1990-91, there was 110 million tonnes of new copper discoveries made. In 2017-2018, there's only 20 to 25 million tonnes of new discoveries, i.e. a fourfold decline. And that's really because of lack of investment in the sector, which has really resulted in just nothing new coming online. So from a producer and a price outlook point of view, it's clearly a very favourable market. We're very excited to be involved in copper. And whilst there are a number of short-term, sort of highly topical things going on in the newspapers and on media, the longer-term fundamentals will ultimately prevail in what is a cyclical industry. So that's a little bit about copper at the high level. Now let's turn to talk a little bit about where we operate, which is Indonesia, which is a very exciting jurisdiction. And I thought it was worth just talking about a couple of things that have occurred there recently. The central government elections to democratically elect a new government for the forthcoming 5 years have just been successfully completed. And what I would call the moderate Nasdem party, led by Joko Widodo, has been re-elected with a clear majority and will continue to govern for another 5-year period. Joko is very much works on a platform that's very moderate and very much for the 270 million people who occupy Indonesia. It's no small country and it's a bit of a juggernaut. He's very pro-development with respect to infrastructure, education, etc. And if you have the opportunity to go to the country, I'd encourage you to just look at many of those sort of infrastructure projects that are occurring. He's very pro getting rid of government red tape in all departments, and we're certainly seeing strong evidence of this in the sort of the sector we work in, which is the mining sector. With respect to the new government, albeit that it's the existing government in power, the new cabinet will be officially sworn in on the 20th of October, and then once that exercise is completed, I think you'll start to see if there are new cabinet ministers, they'll get comfortable in their seats and move forward and full steam ahead for the next 5 years. It remains a country very much open for business and will be, a leading global economy and a powerhouse for the next 10 to 15 years. And it will be inside the top 10 of countries in the world with respect to GDP growth and size. In our industry, it has very much an established mining code and protocols which are heavily based upon and have drawn upon sort of the better systems around the world. I wouldn't deny for a minute at times it can be bureaucratic, but that's not unique, I don't think, to anywhere in the world. I think that's just the case of dealing with governments, but it is streamlining, which is great. Turning to our projects, we have a portfolio which comprises 2.4 million tonnes of copper in JORC compliant resource/reserve, 1.6 million ounces of gold and 16 million ounces of silver, all on tenure that has been recently renegotiated over the past year or so and is very solid. We're located in 2 regions within Indonesia, and the 2 projects, for those familiar with the company, are the KSK contract of work, which we have 100%, and the Butong IUP, which we have an 80% holding in. It's worth reminding everybody of what's been achieved and where we're at with each of those projects. If we turn to KSK, at the BKM copper deposit, we have completed a feasibility study, which James will touch upon in a moment, for a 25,000 tonne SXEW operation. It has long-term tenure, 30 years post-commencement of mining, with the potential of another 2 10-year extensions. Environmental permits have been granted. Indonesian feasibility study has been approved, with the forestry permitting process well underway currently, and we found a new resource on the contract of work area called BKZ in May 2018. And that resource is actually open in all directions. And there's an additional 15 other copper and gold prospects that have been identified with real drill intersections in them. So look, Kalimantan has a good history of mining, and this is a very exciting project. Butong is worth touching on. It's a much larger thing. It, in its own right, has 2.4 million tonnes of copper in resource, 2.1 million ounces of gold, and just under 20 million ounces of silver, of which we've got 80% of. An Indonesian feasibility study has been completed there. We have a tenure of, under an IUP production permit, of 20 years with a further 2 10-year extensions. Those familiar with Butong would know that it's actually open laterally and at depth beyond 500 vertical metres and outcrops at surface. So it's a world-class porphyry system that will grow over time. I think at a high level, maybe I'll pause for a minute and maybe hand over to James, who can talk a little bit about the feasibility study.
Yeah, thanks, Peter. I'll touch on the feasibility study, which for the BKM copper cathode project, which we announced on the 14th of June this year. So the BKM project, located in central Kalimantan, has an initial life of mine of 9 years. The production of up to 25,000 tonnes per annum of copper cathode per year, generating revenue of $1.27 billion and EBITDA of $563 million as well. The capital costs are estimated to be at $223 million, delivering an NPV of $124.8 million. I'll focus on the capital intensity a little bit. This comes out at $7,680 per tonne. This compares quite favourably to new projects coming online that average between $10,000 to $15,000 per tonne. The reason for new projects coming online that are between $10,000 to $15,000 per tonne is because new discoveries are deeper and requiring significant upfront investment, and if the resource has got any impurities, obviously additional processing technologies as well. At the BKM project, we're not faced with this, with the resource being close to surface, and we're utilising off-the-shelf technology when it comes to heap leach and production of copper cathodes through solvent extraction and electrowinning circuits. On the capital estimate of $223 million that we disclosed in the feasibility study, this was all assuming brand new equipment. We see some opportunities to reduce the capital number through the detailed engineering and design phase. Some of these opportunities include sourcing quality second-hand equipment. All of the quotations that were provided through the feasibility study were without commercial negotiation. So again, I see a real opportunity there to drive that number down as well. And things like EPCM, which was all assumed to be outsourced, we could potentially manage that internally or with a local partner to have a significant reduction there as well. The contingency there, we had $31 million. Again, through commercial negotiation, I see that number coming down substantially as well. And likewise with the operating cost of $1.65 to $1.78 for C1 and all-in sustaining. These were quotes without a commitment. So I see that through the detailed engineering and design phase, these numbers coming down a little bit as well. So I'll hand back to Peter now.
Yeah, thanks, James. And one of the things that we felt was important to do in the context of the feasibility study for BKM, which is obviously the most advanced project in what is an extensive portfolio, was to ask the engineering team to identify for us a bit of a SWOT analysis on what other opportunities could we consider with respect to this project, which would increase its value or efficiency. And there was quite a laundry list that was established. There were 20 opportunities, of which we ranked the top 5, and this was disclosed in the feasibility announcement. But it's interesting, of those top 5, there's on a risk-weighted basis, i.e. we came up with a value for each item, and then risk, because of the work that has yet to be completed, devalued that number in each case. If you like, the risk-weighted value added another $38 to $40 million to the base case NPV of $125 million. And there's a suite of them, including a process called Albion leaching, which I'll touch upon in a minute, geological control, looking at the electricity, et cetera, reducing earthworks. But I'll just touch on one, given the time we have today, which is Albion leaching. The global resource for the BKM project is about 451,000 tonnes of contained copper. Within the context of the feasibility we released, only 173,000 tonnes of that is planned to be exploited, i.e. about 40%, through the SXEW process. So it begs the question, well, what are you going to do with the remaining 60%? Hence the concept of looking at some other technologies to see whether or not that's amenable to leaching has been considered. And this is what the Albion process is about. So it's a patented technology generated by actually originally Mount Isa Mines, now Glencore. And it's an atmospheric leaching process with some ultrafine grind that then allows the sulfidic copper mineral material to be amenable to the SXEW leaching process. For the purposes of the feasibility study, we've added a risk-weighted value potential of $20 million. So clearly the objective here for full value is to take a sample of that a representative sample of that sulfidic copper ore and test it via the Albion process in a pilot plant to test its amenability. Clearly, if that's a positive outcome, the impact is going to be no worse than what we currently have, and clearly could be significantly better if at all successful. So we're getting on with that process, and I'll touch upon that again in a moment. I think the other thing that's worth touching upon is that the other thing that's identified is immediately surrounding the BKM defined resource are 4 quite specific targets that we should consider from the perspective of drilling, because clearly proximal resources next to a plant and an operation are quite easy to add into your production profile and potentially build some life into the back end of your project, which is not an unusual approach to take for mining companies. So we've got an area between BKM and BKZ, which we call the link zone, a couple of targets to the northwest and the south, and another one called what we call the root zone, just underneath the western end of the BKM pit. So we're going through a permitting process right now, and as soon as we get that permitting done, we'll get on the ground and start to drill with our own drill rigs. Which sort of leads me to the next part. What are the action points going forward for the remainder of the year for the company? And many of these we've talked about previously. I think the first of which is to continue what are healthy discussions with potential partners to sort of appropriately balance the risk and returns on our extensive portfolio, and more specifically on BKM. That work is ongoing, and we have talked about that before. The next one is just continue with our permit process to allow access for exploration targets at BKM. And I touched upon this a bit earlier. Now that the new government departments are nearly in place, that process will again speed up when the cabinet settle down, et cetera. We've initiated design for social mapping work at both project locations to ensure that the good work we've undertaken with our CSR initiatives is built upon. It's just absolutely critical anywhere in the world to do that sort of work so that you've got the community working with you, fully engaged, and there's ultimately a benefit to all, not just the parties that exploit the mineralisation. And of course, we've scoped out already since in the recent past the work streams for the value enhancement process, of which I've touched upon one item, which was the Albion process. So that, I think, in a nutshell, is where we are at. Kevin, perhaps I can hand back to you, and if there's some questions, we'll do our best to deal with them.
Certainly. So if you would now like to ask a question, please press star one on your telephone keypad, and please ensure your line remains unmuted locally. So once again, if you would like to ask a question, please press star one on your telephone keypad. We do have a question coming through. Our first question comes from the line of Michael Stoner from Berenberg. Please go ahead.
Morning, guys. I've got a couple of questions around funding and particularly the strategics. You touched upon kind of discussions there continuing. Are those still split between different potential partners for Butong and BKM, or could it be a single partner for the group that helps fund you through BKM and Butong exploration targets plus kind of any ongoing study work?
Yeah, Michael, I'll try to answer part of the funding piece, and then I guess Peter can take over. So in terms of funding, so I guess if I go back to what in August we raised $2.1 million on market, and that was after we completed the feasibility study. So our burn rates have actually reduced substantially after completing the feasibility study, so we've got sufficient cash flow to meet obligations going forward. In terms of local partners and other strategic discussions that we've got, so they are multi-pronged. So we've got people who are interested in partnering with us at Butong. We've also got people interested in partnering with us at BKM. So these are separate discussions. And we've also got various investors looking at joining in both assets tactically as well. So those discussions have started, and they've started in earnest following the feasibility study, which sets a line in the sand in terms of value going forward.
Yeah, perhaps the only other thing to add, which I think is interesting and probably reflects a little bit back to how I opened the discussion, I think we've gone through a period, particularly in the last 6 to 12 months, of a relatively flat or negative sort of view on commodity markets, with the exception of gold, which is a bit different. But what we're noticing now with the groupings we're talking to is that the attitude is changing very much to seeking investment and exposure in the big base metal, which is copper. So it's, to use the term in the market, it's gone from risk off to risk on. And I think that's really just totally consistent with the supply-demand timeline and, the fact that there's just not enough production coming online. So the level of interest, and I don't think it's just unique to Asiamet. I think the level of interest in the sector in the background, not necessarily in the equity markets, but in the background, is starting to escalate.
Okay, thank you. And if I could ask you one more. So in September you announced or gave us kind of a bit of a steer on the potential impact of this public infrastructure upgrade. Is it still too early to give us some kind of feel for what that could do to OPEX for BKM?
Yeah, Michael, I'll handle that. So yeah, you're spot on. So we haven't actually gone through and modelled it all yet. So all we've done is we've identified the path that was available to us. So initially we were going from site to Banjarmasin, which is a significantly longer route. When we were closing out the feasibility study, we actually came across some infrastructure upgrades, which allowed us to actually incorporate or potentially incorporate some of the new logistics routes. But we didn't have the time to complete that to feasibility standard. So we're working on that in the background, so we don't have any numbers for you at this point in time.
Okay,
by definition, it's about 200 kilometres shorter in distance, so there will be a positive impact. It's just a bit hard to quantify at this point.
Okay, understood. Thank you.
Thank you. As a further reminder, if you are wishing to ask a question, please now press star one on your telephone keypad, and please ensure your line remains unmuted locally. So as a further reminder, please press star one if you are wishing to ask a question. Our next question comes from the line of Phil Wilson, shareholder. Please go ahead with your question.
Hi there, James and Peter. I have a question in terms of how you see the potential mine life given the additional resource that is available and not currently in the plan.
Hi, Phil. Thank you. So as James said in the presentation, the base case mine life for BKM is circa 9 years. So that's the first point. The second point is that the great majority of drilling that went into the ground in the past 18 months at BKM was specifically centred, with a small exception of BKZ, was specifically centred, if you like, within the pit rim of BKM. And that was a good allocation of funds to achieve the objective of completing the feasibility study. There are, as I touched upon earlier, a number of targets immediately proximal or surrounding BKM, which need to be evaluated, and I think that's the first point. The second point is, as a general statement, and this is not unique to this project, you don't tend to spend the money in the ground to extend mine life at the start of the mine. What tends to happen is you get commissioned, operating, producing, and then progressively over those first few years, once that settles down, you start to spend more aggressively. So what is normally the case, and of course, we can't be absolute about this project, but what is normally the case for mining projects is they tend to extend over a number of years at the back of their life because you start to spend around your mine. We've already defined a lot of inferred resources around the mine. And the other thing is that once you're operating, you've got all your infrastructure there, so it gets cheaper to do that. So I think we would be optimistic that as the mine goes on, it will grow in life. What I can't say at the minute is I can't quantify that at this point in time.
Thank you.
Thank you. Our next question comes from the line of Nick Holden, private investor. Please go ahead. Nick, your line is now unmuted. Please go ahead with your question.
Hi, Peter. Hi, James. Can you hear me okay?
Yep, go for it, Nick.
Just more of a sort of high-level question based on your views on the recent sort of city analysts and what they're saying post the feasibility study on BKM. It'd just be interesting to get your views on the mismatch between those valuations and the current company market cap. And if you don't mind, just another one on the BKM versus Butong. I'd like to know whether you think they hold more value for Butong as a larger early stage asset, or BKM as a kind of medium scale post feasibility study asset.
Yeah, thanks, Nick. I'll do the first part of the question in terms of the broker numbers, and I guess we can talk broader about the resources that are contained in both projects. So I guess there's a broad range of market analyst valuations ranging from 13p per share all the way up to 22p. So we've got a high and a low there, which is a fair distance from the current valuation of I think about 3p is what it closed at last night. which, to us, it doesn't make a lot of sense, especially given that we've got a commercially viable and economic feasibility study out there of $125 million with some upside, and that discounts any exploration upside as well. So there is a bit of a disconnect in our minds in terms of that value, and then you've got Butong on top of that as well. So so we believe that there's a strong value argument for the stock currently, but I guess time will tell.
Yeah, and perhaps just to add a little bit more to that, I touched upon it briefly in the introduction, but I think shorter term, and they are shorter term gyrations in the market, have had a fairly broad impact on more than just our company and driven stock valuations down. The only thing I can, and for us running a business, we play a longer game, and and don't be offended by this, we can't look at the share price every single day. We're building a business and based on fundamental value, and we feel that based on the supply-demand situation in the sector, based on our metal inventory, and as James touched upon already, quite clearly defined value, it will prevail. It is very frustrating, but we're all very familiar with what's on the news every evening, whether it be Brexit or trade wars. But they will work through, and then it'll find its normal watermark. I think that's sort of our view on it.
Thank you. We currently have no more questions in the queue.
Okay. Well, I think I'd like to just perhaps close off and thank everyone for making the effort to come online. Just reiterating, the purpose of today is the first, or if you like, the inaugural quarterly call. We'll do this on a regular basis, and of course, if there is any major events within the company, we'll also do a call, but it's a more structured way of getting the message across, and we appreciate everyone making the effort to come online. If there's something that we haven't dealt with on the call, please, feel free to come through to the management, and we'll attempt to answer it for you. Thank you very much.
Thank you very much for joining today's Asiamet conference call. You may now disconnect your lines. Speakers, please stay connected.